SoFi crushed expectations with its second quarter earnings. Net revenues up 44%, user growth up 34%, fee-based revenues up 72%, and the market is going crazy for it. Shares surged as much as 15% yesterday, and the stock has more than doubled since April. Now, usually after a huge pop like we've seen yesterday, we, at least at Prof G Media, have a tendency to be a little bit skeptical. But in the case of SoFi, we cannot see much to dislike. And the thesis is quite simple. That is, when it comes to financial services, there is basically no more obvious and inevitable trend than digital banking. And as of today, SoFi is the leading digital bank, and it is therefore best positioned to ride that wave. And this is mostly a demographic observation. 96% of Gen Z uses online banking today. You compare that to the boomers, where the number is less than 70%. This is why banks like SoFi offer no in-person branches. They recognize that young people don't care about being in person, so why waste the money? Meanwhile, the cost they save on the overhead allows them to invest in other things like, for example, higher interest on savings accounts. In the case of SoFi, it's 7 times higher than traditional banks. So this was a big quarter for SoFi, but it's also a good reminder of this digital banking trend. And in our view, if you're betting on financial services, you should be betting on digital. And this is about as good a place as any to start.